What's going on, traders? It's Ricky with Tech Solutions. So in this video, I'm going to be talking about how to find a good entry. So pretty much I'm going to be breaking down stocks on how to identify potential. You can do this with, scanning for stocks. Obviously, the market's not open right now, so I'm not going to be able to do that. But I've made a video on how to scan for stocks themselves. But pretty much, I'm going to use the stocks that are in my watch list. So the first step is going to be identifying potential. The second step is validating the bounce, making sure that it's identifying or validating the support and seeing an upward trend, and then sticking to your plan. So knowing where you're buying, knowing where you're selling, and knowing where you're going to be cutting your losses. So all that risk management portion. If none of the stuff that I'm talking about right now, when it comes down to identifying potential, validating the bounce, and sticking to your plan makes sense, then make your way over to my YouTube channel. And within my YouTube channel, I do have a series of helpful videos, and it talks about frequently asked questions on how much money, how do they trade stocks, what is Robinhood Instant, 3 simple steps to build your watch list, and a series of other very helpful videos that have been requested. I have over 420 videos that have been requested by our members within TechBud Solutions that I've previously made. If you guys don't know what TechBud Solutions is, we do have a little bit over 41,000 members worldwide with all the different platforms we have available. Within the free Facebook group, it is a closed group, so the link is down below for you to join, and you simply have to just request to join. We have a little bit over 36,000 members worldwide, and the thing that we do best is we provide a free and simple platform for both new and experienced traders. The main group chat link is right here on the top pinned post. So again, pinned post right here. And if you have any questions or want to search up for any specific contact, then feel free to use this search this group sidebar right here, or all the files are going to be under the files tab. Just wanted to let you guys know and guide you guys in the right direction. Okay, there's two different things that you have to think. Are you thinking about swing trading, or are you thinking about day trading? If you're thinking about day trading, then this frequency that I'm looking at right now, when it comes to the 10-day chart to 30-minute frequencies, is not going to be the most efficient way to find good quality day trades. What I mean by that is when it means to day trade is to buy and sell a stock all within one day, and you want to make sure that it has that margin to make up. So realistically, like yesterday on our play with JDST, because it bounced here at 57.50 the day before, and then it was at highs of about almost $60 when it came down to when it opened. It had this spread, right, this margin from lows to high within the past 24 hours of about 3.84%. Do you guys see that percentage right here? 3.84%. Therefore, going into the following day, because it did drop below, but it was seeing an upward trend, realistically within the past 24 hours, that would be a realistic outcome. If it hit highs of almost $60, then it's possible for it to do the same thing within the next day. Does it mean that it's going to happen? No, but it gives you a better understanding of what is possible. Understanding that, that's why we ended up performing and doing so well when it came to my trades with me and my little sister. Not too sure if you guys saw the video that we filmed, but my little sister made 4.04% on a swing trade and day trade on JDST yesterday, as well as I did. But obviously it's more attractive that someone a little bit younger was able to actually complete that task. But it comes down to the simple understanding of identifying the potential, and simply the way that you identify the potential is that you look at the stock. And if you're looking at it as a day trade, I look at it as a 2-day to 3-day frequency, and I see the spread. I see that if it's close to or near to the support, which JDST is at, it offers potential. It comes down to justifying to see if this is potential that's worth trading. I saw that it had 4% potential, and that's why I came down to wanting to day trade it. But it offers swing trade potential as well. If we do a 180-day analysis, basically on where it stands within the past couple of days, you can see that it usually bounces pretty well. It has even gone below to $56 before, but it usually does bounce pretty well around $58 to $60, and then comes back up to resistance at about $70. Once, twice, 3 times, 4 times, 5 times. So again, this does offer potential for a swing trade as long as it validates the support. But as a day trade, I thought 4%, I can do a quick in and out. That's going to be something I think I'd like to take advantage of today. It hasn't validated the support, so I don't really treat it much as a day trade, because going into the next step, we've identified the potential that it has potential for a swing trade, but it has not validated the support. Therefore, is it a good entry point right now? Is this a good investment? No, if I get in right now, I'm kind of just forcing it because I just want to get in at the lowest price, but there's no real telling on what's to happen if it continues trending back down, which it looks like it is still trending back down. This EMA line The candlesticks are still below the EMA line, meaning that it's still trending below, the exponential moving average. What I'd like to see is the candlesticks actually break above the EMA line, indicating upward momentum. So it has not validated a support. It has not broken above the EMA line. It is not showing signs of upward momentum within a swing trade. Understanding that, I'm simply going to focus on a 2-minute or 2-day 10-minute frequency. And what it came down to was I knew the previous support was at 57.50, so then when it dropped below that price point, we did a really good job at being able to get in at a very good price point. My little sister got in at 57.19. I ended up getting in at 57.33, and that's when we started riding it back up. So that was on our second entry point. We ended up on our swings, ended up selling it above $60. But it's because we found it to be such, offers so good potential at that low price that it is, that we knew that the potential for profit was much greater than the potential for loss. Let's move on to another one to see if we can break it down. RTNB. So RTNB is one that if you guys have, stayed up to date with this specific stock, have noticed that this is more of a momentum trade. You can see that based on previous trends, within the first 5 to 10 minutes is where all the action happens, and then it sees a downward trend from there. All the action sees a downward trend. All the action sees a downward trend. Understanding that this is a momentum stock. Therefore, as you guys can see, it usually flatlines during pre-market hours, flatlines during pre-market hours, flatlines during pre-market hours. So if the demand and then the hype is still relevant on the specific stock, going on to Monday, because today's Saturday. So once the market opens, if the hype is still there and it's still approaching the resistance and the demand is still relevant and you can see all the orders coming in, it would be no surprise if we see a nice little pump for it to be able to push up. Understand that the pump doesn't last very long, and at max, it probably lasts maybe 20 minutes. Understanding that it's a quick in and out, and if you don't get in early enough, then you're most likely not going to want to ride it. This has to be a little bit more different than, when it comes down to getting in at a good entry point. This is definitely more of a momentum trade, so it's more of a technical breakout. So instead of, it still comes down to identifying the potential. So what we did is, we looked at previous trends, we identified the potential, it's flatlining at the resistance, and, once it breaks that resistance, it has a technical breakout. So instead of this one validating the support like, JDST or like AMD, ones that are trending down and then it validates the support, something that, that I take into consideration when it comes down to trading momentum stocks, it's making sure that the demand is there and that the volume is there. And if it still looks like a potential technical breakout, all I want to make sure is that I get in before everyone else does, making sure that, the whole point of these momentum stocks is to be able to get in and get out before everyone else does and seize the demand not really being there. So that's how I break down when it comes down to trading momentum stocks. If you guys want to learn a little bit more about momentum stocks, we do have one of our top traders that leads the momentum subgroup. His name is Connor. Feel free to reach out to him. Brad leads our OTC stock group, and then Kyle leads our mobile investment subgroup, as well as he is a day trader. But it pretty much comes down to, just like I said, so let's go ahead and continue going down the list and seeing if we see any other stocks that offer day trade potential that validate the support. So there's actually one that did an extremely good job that one of our traders called out, and I'm going to look at a 10-day analysis. And the reason that I'm looking at a 10-day analysis, I'm going to even look at a 20-day analysis, and I'm going to focus in this area right here. So this, although it looks like, this is definitely not a momentum stock, although it did have a nice little pump once it validated the support at $2, but it's definitely not a momentum stock. It usually peaks out at about $2.30, as that was a previous support, so it becomes a new resistance. Doesn't mean that it can't go above it. It just means that, that's usually where it peaks out at, and if it breaks above it, then it can continue trending up from, 230 to 250. But this is the real spread or the real margin that I've identified. So I've identified the margin, so I'm going to break it down. I know that based on previous trends, if you guys could see right here, it validated the support here at $2, and then it trended back up to 230. It was seeing a downward trend, so what we do is we're patient and we wait for it to validate the support. Just because it's at $2 doesn't mean that 100% it's a stock that you should buy, especially if you're thinking about day trading it. What I mean by that is all those that got in at $2 right here, they were supposed to get out, and if they got out, great. But when you're day trading a stock, regardless if it doesn't perform the way that you wanted it to, I personally don't justify converting it into a swing trade just because it didn't play out the way that I wanted it to, or because I'm seeing a loss. If I validate the support and I get in at a specific price point, and it I'm at 205 and it just didn't see the performance that I wanted it to, then it comes down to, okay, well, I'll lock in my profits and I'll do a better job next time. The following day, it validated support and it broke above the EMA line. And when it broke above the EMA line, again, we identified the potential. It broke above the EMA line. It validated the $2 support that was a previous trend. And then what's the last thing? Set up a plan. So before you should even buy in any stock, regardless if it's a momentum stock or regardless if it's a technical trade or a swing trade, understand that there's just always margin of profit. So from $2 to $2.30. So that's your margin for potential. So identify a good buy point after it validates the support. Identify a good sell point once it's approaching the resistance. And identify where you're going to cut your losses if it does not go according to plan. Understanding that this is a technical trade, I know that there's a technical support at $2, therefore I would have my stop loss set at 1.99, managing my risk at less than 1%. So it'd be like 0.25% that my risk would be managed when my potential profit is much greater to highs of 13%. Therefore that risk or that investment is worth taking because I know that $2 is a previous support and I know that this specific stock bounces at an exact price point. Something like AMD, so, regardless if you identify the potential for AMD or the support to be at $12, sometimes the approach that I take with these specific stocks that are a little bit higher price and that move all over the place is I set a percentage stop loss. So instead of cutting my losses at $12 if I buy in at 12.01 and cutting my losses at 11.99, I set a stop loss at 1%, meaning that if it drops more than 1% from $12, which is the support, then I'll cut my losses then. So it just comes down to the approach that you want to take. If it's a technical approach, or if you want to take the approach of cutting your losses at a max percentage loss. Regardless of what it is, it has to be something that you see value in and that you can identify. So again, we're looking at this as more of a swing trade because realistically, from 230, it took when it bounced at $2, it ended up hitting 230 all within one day. So it definitely had that possibility of doing it. Did it mean that it was going to do it 100%? No. Again, understanding that nothing's 100%. So once it broke above the EMA line, it started trending upward, and that's what would have been the indicator for myself. That'd be like, okay, well, we're moving up and we're seeing a good sign of upward momentum. But then once I can see the RSI indicator is approaching the resistance at 230, I could see that it was getting more to the overbought side, meaning that it was almost being overvalued. Therefore, it's not the best buy anymore. So if anything, once it broke above 220, that's where I would have set my stop loss just to make sure that I lock in my profits if all of a sudden it takes a dip. And once it broke above 225, I could have set my stop loss there. And that's most likely where I would have stop lossed out because, it ended up not even hitting highs of 230. That's why it comes down to identifying that margin for profit, setting up your plan on where you're buying, where you're selling, waiting for the validation of the support, making sure that you are waiting for the bounce to not continue writing it down and waiting for the bounce to make sure that you are investing in something that's appreciating in value and not something that's seeing a downward trend. That's probably one of the biggest factors that a lot of our traders, experience is they get in a stock and they continue writing it down, or every time that they buy in, it continues to go down, and every time they sell, then it goes up. It's because you're not patient enough to let the charts do the talking. It's because you're not patient enough to actually let it validate, or be patient enough to actually let it do its thing. And understanding that you just have to be patient, have to wait for the stock to perform the way that it's supposed to. And once it validates that it does have potential and that it's going according to your plan, then it's up to you as the investor to see if you see value in it and to make the decision to invest in it. But that's really just it. So it's about identifying the potential, validating the bounce, making sure that you're investing in something that's seeing signs of upward momentum, and then sticking to your plan, knowing where you're buying, knowing where you're selling, knowing where you're going to cut your losses. Again, risk management being one of the most important factors. And then along the way, while you're making profit, making sure that, I follow with a trailing stop loss or a stop loss that, all of a sudden, if it takes a dip, I at least lock in the profits that I have already made. So that's one of the biggest things. Green is green, regardless if you're up 1% or if you're up 100%. Profit is profit, and if you're making profit, then you're doing something that 90 to 95% of the stock market can't do. So just note that. Don't worry so much when you're starting out and focusing on maximizing the dollar value that you can make, but focus on percentage growth, because when it comes down to really scaling out, then you're really going to be able to see that in the long run, you're going to have much more money to invest in. And starting right now with people that are starting with $100 to $1,000, right now is where you should take advantage of the opportunity to focus and refine yourself as a trader. So later down the road, when you have more money to make money, it's going to be a much easier transition rather than hoping for the best and trying to make the most, because you still have not refine yourself as a trader. So if you guys are just getting into the stock market, the biggest thing that I can recommend is making sure that you do simulation trading, which is fake money, and it still lets you trade real quality stocks. That's 100% the best recommendations. If you don't know about investing, you don't know how to manage your risk, you don't know how to identify potential, and you're just getting started, don't invest $1. Get started with paper trading, and once you prove to yourself that you can be a profitable day trader, then you can make the transition over. But that's, I think, one of the most common mistakes that people make, and that's investing real money once starting out. Just because you have access to the market right away doesn't mean that you should start investing, because just because with $3,500 that I can make, within a day, like let's say like $250, I take about 3 different positions when I make $250 by risking $3,500 per position. It does not mean that you're going to be able to do the same thing, because you don't have the understanding on how to invest in the stock market. And it's as simple as that. So I want to thank you guys again for watching. If you guys have any questions or any suggestions when it comes down to video recommendations that I can make for you, please feel free to let me know. I would love to have you as a part of our group. So if you're not part of our Facebook group already, feel free to join, as well as if you have not subscribed to me or any of the TechBud Solutions team, please feel free to follow us. We'd love to have you and be a part of your success if you guys see value in that. And feel free to skim around through my YouTube videos. I'm sure that you would find some of the videos that I have pretty fun or informative. I have a couple videos of like my McLaren and my Z06 and the series of investment properties that I own, if that's something that you're interested in, as well as a lot of videos talking about like the different forms of investments that I take part of, as well as my team. So we did just drop and have this pre-order available for the TechBud Solutions or TechBuds apparel. The link is going to be in the description. Feel free to check it out. The pre-orders are now available if you guys want to be a part of that. Again, good quality t-shirts, and just let me know if that's something that you guys would like to do. We do have a limited supply, so just let us know. Thank you guys again. Continue working hard, continue following your dreams, and let your passion be what drives you for your success. Just know that every market is profitable. It just comes down to focusing on what you see value in and only investing in that. Thank you guys again. Take care, and like always, let's make sure that we end the year on a green note.